Hey everybody, last week I posted this video in which I talked about the importance of understanding how to roll a position when you are selling covered calls. And guess what, guys? Less than a week later and I'm in the same predicament. But first, if this is your first time tuning in, again, my name is Wayne Nichols and I'm excited to share my journey with building generational wealth. And one of the ways I hope to get there is by selling covered calls on a regular basis. And IWM is one of my favorite stocks to do so. So let's take a look at some basic statistics of my IWM holding. First and foremost, you have to own 100 shares before you can sell a covered call for any position, and I do. My cost basis is $175.95. I own 100 shares, and if you looked at the current share price of about 184, you would say, Wayne, you're in a great boat. You are currently above your cost basis by 5%. And you're right, but the problem is I have sold a covered call. So I have generated premium income, essentially entering an agreement to sell my 100 shares, not at the current share price of nearly 184, but rather 178. So you can see for me, I want to lock in premium profit, but I also don't want to part ways with my 100 shares of IWM. So let's see if I can yet again roll this position out. So there is the option information. The 178 cover call expires tomorrow on the 13th. And right now, if I wanted to buy to close this position, meaning I want out of this contract, I want to keep my 100 shares, I would have to pay $5.98 times 100. Remember, everything with covered calls is in denominations of 100. So I click on buy, and if I really wanted out of this contract, I could essentially buy it for $590-ish. But I want to go ahead and roll the position. And if you recall from the earlier video, rolling position means you are buying to close your position, simultaneously selling to open a new position. So I'm going to go ahead and select on roll position. I'm going to choose a new position. And I am hoping to come across a further date with a better strike price that offers me net premium above what's going to cost me $585. And spoiler alert, it's going to entail me having to push out into late January, perhaps early February, before I can find a position that's advantageous to me with my goals of better strike price, net premium. And anything that you see below the share price is categorized as being a covered call in the money. Anything you see above the share price would be categorized as an out of the money covered call. Obviously, if the stock price has gone up significantly in the last week, I want to see if I can get a better strike price than 178. So let's see if I can find a strike price closer to the current share price. And if we're looking at February 3rd, if I were to look at the 182 covered call, that would get me $532. So I would still be upside down in my current position. Let's go one more week out to February 10th. This is looking a little bit better. Now, although I would like to get something out of the money, let's look at something just shy of in the money. And I do look at this 182.5 covered call, and that's going to get me right around that 592. So let's go out and look at one more week out, and this is looking a little bit better. I am looking at rolling this position to the 182 strike price. Now you might say, well, Wayne, if the stock has gone up that much in a week, why wouldn't you keep rolling to find a out of the money strike price? And it kind of goes back to instinct. This is not the first time I've had to roll a covered call. And I just don't think that IWM is going to continue on its rising streak. I could be wrong, right? I could be making essentially a part 3 video that says, hey guys, I made a mistake and my shares got called away. So I am going to roll to this 182 covered call. And in doing so, I am going to essentially get the difference between 569-ish. It's obviously changing in 649. So let's go ahead and do that. And you'll see from the options chain, Robinhood kind of breaks it down. Listen, you are buying to close your current position. So there's the debit of 576 times 100. And then I'm opening up a new position, better strike price, further out date, and I would have received 654 times 100. So that's a difference of nearly $70. I'm going to go ahead and see if we can make this go through. How cool would this be? Yet another live video that indicates, and there we have it, just like that, right? So, by the way, when I'm doing these options, there is physically somebody on the other end of this contract. It's not like I'm making, this deal with Robinhood. Robinhood essentially is the middleman. They are the brokerage. They are providing the options chain. So somebody else on the other end obviously was buying a call, and I am selling a call. So this transaction is done. Let's go back out here and now look at IWM, and you will see that I now have a new option position. So this current option for a strike price of 182 closes on February 17th, so nearly a month plus. Let's go down over here and see how I would enter this into my spreadsheet. So here's my spreadsheet from 2023, and I'm going to show you guys how I keep this updated. Now, if you looked at what I've earned for the month of January 2023, I have earned $245. Now, there is an asterisk or fine print on that. Technically, this position's not closed out. Well, actually, I just closed it out, and that's why I want to update that. So up until now, I earned $245 selling a covered call against IWM. Let's go ahead and let me show you how I keep these spreadsheets updated, which is really, really important if you intend to sell covered calls. So I'm going to go back over here, and it kind of looks backwards, but I want to go ahead and enter this information before I enter in my new information. And you'll see at the bottom of your screen, I sold this contract for 588. So I'm going to go over here and I'm going to type in 588. And my spreadsheet does the math, and I'm going to indicate that I roll close this position. Now this was already a roll. So now I'm going to go ahead and fill in the remainder of those tabs. And if you just looked at this, you would say, wow, like for the year, Wayne has lost $343. Well, that's why we need to enter in the new position. So let's scroll down to the bottom of my spreadsheet. I'm going to go ahead and enter in my information. This is the covered call. The new strike price now is this information. So the 182 strike price, I always put that information in there. The new expiration date is 2/17. And to sell this cover call, I received $656 in premium. So now let's go ahead and add the indicator that this is an open rolled cover call. I'm going to once again go back, sort this A through Z, and I want you guys to see now what I've earned on just selling the covered call against IWM in 2023. I am now up to $313. So up from $257. Why is that? Because even though I sold this covered call or this rolled position for a loss, I opened up a newer position at a higher net premium. So yes, I technically haven't profited this full money until I close out the position, but I will keep rolling this position until I'm able to close it out early and hopefully lock in as much profit. Now, for those of you that say, well, Wayne, that's an awful lot of rolls for a position. Don't you think it's going to get away from you? It may, but I bought this stock in November. And you can see from November, my very first covered call that I sold, I had to roll it. But eventually I was able to roll it and I was able to close it out early. So why am I so optimistic about IWM, about this transaction? It really goes back to history. If we look at how much I've made selling covered calls on IWM, from November of 2022 to my last covered call in late December, I have earned $1,000, right? So $1,080. That's pretty good. And along the way, yeah, I had to roll a couple of positions. So rolling positions to me is part of the game of selling covered calls. You have to feel comfortable. You have to be knowledgeable. And I really hope that Listen, I hope that the stock trades sideways or maybe even goes down a little bit. And it's completely cynical to say, like, why would you want to own a stock and you want that position to go down? It's kind of the nature of the beast when you're selling covered calls. What I really hope that happens is that IWM does not continue to increase where, eventually it gets away from me where it's no longer valuable for me to sell covered calls and roll. I might have to let those 100 shares get called away. And that's why it's always important before you ever sell a covered call, you want to make sure that you're doing so above your cost basis. Right now, if this thing goes to the moon, let's say it goes up to $200, and the person on the other end of this contract says, "Well, I'm going to go ahead and call those shares away." It's a win for him because if the share price is $200, he essentially bought 100 shares for the price of 182, right? So he got a steal, a killer deal, right? He owns 100 shares and he's got locked in profit. But it wasn't necessarily a bad deal for me. Yeah, I lost out on potential profits, but because my cost basis is 176, we'll say approximately, I still earned, right, gains on my initial cost position, not to mention all the money I made along the way in covered calls, as well as dividends if I earn them along the way. So again, guys, the saga of rolling this IWM continues. Hopefully you guys are finding this information interesting. Got some great content coming your way later this week, so be sure to be on the lookout. And of course, if you like this content, I hope you guys follow along on my journey. Go ahead and hit that ever coveted thumbs up button, and we'll see you on the next one. Thanks so much.